Hello traders, welcome. Thank you for joining me on the Binomo live channel again. Today we are discussing about habits of winning traders, habits of successful traders. Who's your favorite trader? Do you have one? And do you focus on particular habits that make them successful traders? So over the years, I have been trading, starting with reading books, watching videos, and discussing it with other traders, joining communities. I have learned to like certain traders, and you'll be surprised that some of these successful traders, they are a bit unusual in terms of what they do, and some of them are really common sense habits that they have, and it's just that they are consistent about it. So us being traders who are trying to improve our trading strategy, trying to improve our trading results, we can learn a thing or two by knowing more about successful traders. If you have your own successful trader that you follow, that you have researched and enjoy reading about, let us know in the chat, let us know in the comments what's the special habit that your favorite trader has that you like, and you can share that with us. Hi Tolgahan, I can see you in the chat. Thank you for joining us. Hope you're having a good time in the market today as well. Today we recently got the US PMI data coming out, and it was a bit disappointing, and this has pushed Euro USD, AUD USD, GBP USD all the way up. If you look at the chart on my screen, I have AUD USD on the platform, and you see that very long spike up. That's really good. If you saw the news coming, you know, you've got to be able to make sure that you don't stay in the trade too long, because things that go up will come down and things that go down will come up. So always be ready for that. So let's talk about the successful habits, or habits rather, of successful traders that I want to share with you guys. So number one, there is this guy called Stanley Druckenmiller, or Druckenmiller. Okay, so Stanley is somebody who worked with George Soros for a long time, and his particular habit, his special thing, the special thing about him is not that he does a lot of research, but his research is focusing on people that don't agree with him. He likes to read about views or viewpoints, points of view, opinions of other people, other research analysts, other traders, or even news written by other people. He likes to find ideas that are against his own ideas, people who don't agree with him. That's the special thing about him. And the reason he does this is because he wants to find out the weakness of his analysis. You know, what is he not paying attention for himself? You know, what are the things that he is ignoring by doing his own thing? So he has his strategy, but to complete the analysis, he will spend time doing research on what other people think that doesn't agree with him. And by doing this research, he is able to make an even more complete analysis, because he will cover all angles. He will cover angles that he agrees on, that he understands, and he will also find angles that he doesn't quite understand, or he will find angles that have enough facts to prove that he's not actually 100% correct. Okay, so that's the special thing about him. You know, a lot of times in trading, we hear about people who are following the herd or following the crowd. Yeah. And if you heard about FOMO, fear of missing out, that's also following the crowd and following what other people are doing. So this guy is special. Okay. Stanley Druckenmiller is special. He goes to the crowd to find out all the people who don't agree with him and uses that to complete his research. Okay, so maybe that is something that you could apply. If it helps you, you could give it a shot, try it for a couple of weeks, see if it makes you improve. So he specifically goes out and look for everybody who doesn't agree with him and read more about all those views. Okay, so you can do that. Whenever we are trading currency pairs, whenever we are trading commodity or crypto, there's always things written about these assets. There's always things written about the market, about the sentiment, about the psychology, about whatever is happening, geopolitical events, news, or anything like that. Even economic situations, whether they are, booming economy or economy that's heading into a recession. So these things will have all kinds of views. You will find people who agree with you, and you will also find people who do not agree with you. So if you follow Stanley, find people who don't agree with you to make yourself an even more informed about all the perception that is out there. Okay, so go to the crowd, but find people who don't agree with you. So that is Stanley. That is his habit. Let's talk about the second trader. I have 5 traders I want to share with you, all different traders, all with their own unique habits, and that what makes them successful. The second one is called Bill Lipschutz. Okay, Bill Lipschutz. So this guy, his special habit prevents him from getting drifted in the trend of the day. Okay, whatever the trend for the day is, or whatever the trend for the couple of days or during the week, whatever the mood of the market is, he has a special habit to prevent himself from getting caught on that kind of trends. Okay, and of course, if you do that, you are basically trying to separate yourself from the crowd, and you are protecting yourself from emotional decisions or feeling left behind. Okay, he doesn't want to feel left behind, so he's got this special thing. Of course, it requires discipline to do this. So his special habit was he would look at assets. Okay, Bill would look at assets, and he would immediately, after he completes his analysis, he would put his entry point and exit point, and doesn't change that no matter what. Simple, isn't it? Really, really straightforward and simple. He would look at some assets, do some analysis, do his complete usual analysis, and then right when he has made a decision or come to a conclusion about what's going to happen to one asset, 2 assets, 3 assets, he would decide his entry point and exit points for each asset, and he will never change it. Okay, for each asset, he will set entry point and exit point, or in our case, for the platform when we trade, we don't set exit points, but we set the trade duration, the time when we think the trend will play out, and when we can have the trade closed to make a profit. And he doesn't change his opinion after setting these things. Okay, once he sets his entry point, he doesn't change it no matter what. So this way, he can be completely protected from the crowd, the thinking of the crowd, or the situations that may move or influence the crowd's opinion. He doesn't care. All he cares about is his research and his conclusion, and then his trading entry and exit points. For us, we need to decide an entry point and then the duration of our trade. That's it. Very straightforward, very simple. That is Bill Lipschutz. Okay, some people call him the walkaway trader. He decides on something. He decides he's going to do something with an asset, and then he just walks away after the trade is open. So you should give that a try. I've tried this a few times as well. It is useful, but then again, because you are trying to avoid emotion, what tends to happen is really big moves are happening in the market. Like today, I'm seeing AUD USD move so much, but I've already exited my trade. I've already closed my trades, and there's no way I can go back in because you don't change your rules in one day. So if you follow Bill, that's what you have to do. That is his habit. Let's talk about the third trader. Let me know if you have a special habit from any of the traders that you follow and share that with the rest of us in chat or in the comments section. Hi Saga, I see you. Hard work and patience. Yep, definitely. Hard work and patience is, people think trading is it's an easy thing for, when you see winning traders, you think it's an easy thing to do. It's very straightforward. You're just looking at lines and movements up and down. But, spend some time and spend some money in the market. Those very same people will change their opinion of how hard it is to make money and to be consistent at it in the market, whatever market it is, whether you are in Forex, whether you're in the stock market, whether you're in the crypto or commodities market. It is not easy. You need focus, you need research, and you need to have mastery of psychology. Okay. So today we're talking about habits of successful traders, and hopefully we could learn a thing or two about how other traders have become successful using a special habit that they have. And let's look at the third trader. The third trader is somebody who's famous for this book here. I don't know if you've read it. It's called The Turtle Trader. So his name is Richard Dennis. Richard. He was one of the guys who conducted the turtle trading experiment. So basically he believes that traders are not born. Traders can be trained. Okay. So he set up a competition. This was many years back, and a bunch of traders he interviewed came in and joined this program. And true enough, by using a very specific process, you can turn anybody into a successful trader. Okay, of course, the discipline part, you have to supply, you have to bring discipline to trading. But besides that, if you have a winning process, you can win. You don't have to be born with it. Trading is something that you can train for and develop. If you're not a good trader today, if you're a bad trader today, it doesn't mean you cannot turn yourself into a successful trader. So that was basically the experiment. And I can't remember how many, but a number of them turned very successful and produced, I think, tens or hundreds of millions of dollars from trading alone. And they were trading commodities and a few other assets. So what's the habit? What's the special habit that Richard has? So Richard, or Rich, he believes in following rules. He believes in setting specific steps. Before you open a trade, have specific number of steps to follow, and by having these steps tested out, you will come out with a system. Okay, and that system, if you stick with it, it will produce success. Okay, of course, the system doesn't come with discipline. You as the trader have to supply the discipline. Now, he didn't, I don't have his exact set of process, but you can read up about it. You can Google it. You can go even on YouTube, and there are books written about this turtle trading experiment by Richard Dennis. And so his special habit was, don't trade without a process. Don't enter a trade. Don't open a trade if you haven't completed your analysis, or if your analysis tells you don't open the trade, you don't open the trade. You follow the rule 100%. So that's what he's doing. So of course, by doing that, he also removes himself or removes traders from emotion. Okay, there's a consistent pattern there. If you see all the different techniques or different habits by different traders, they are designed to separate the trader and the market, separate the trader and the crowd, so that they are not making decisions based on their emotions, which is sometimes too positive or maybe sometimes too negative. Always stick to the process, and rely on specific steps. Okay, so that's Richard Dennis. And the thing about the turtle trading process that they used, I read about it, and they did a lot of back testing. So once you have come up with a process and you tried it and it works, you also need to try it backwards. Okay, go back to the charts, go far back at historical patterns and see if those signals come up in the past, and then were you able to make profits from it. So a strong step-by-step process is required if you follow Richard, and a strong amount of backtesting or a huge amount of backtesting is needed. That's how he gets confidence from his trading system. Okay, so let's talk about a fourth trader that I have today, and what's his special habit that we can all learn from. And fourth trader is Ed Seykota. Have you heard of him? Ed Seykota. So Ed Seykota is a trend follower. He has a philosophical approach to trading, and he believes in understanding background information or underlying factors that's moving the markets. Okay, so he reads a lot. If he's focusing on currency pairs, or if he is focusing on stocks, he doesn't just look at those assets. He does a lot of background reading or background research outside of those assets. So if he's looking at, for example, Microsoft or Apple or Nvidia stock, or if he's looking at currency pairs like GBP USD, Euro USD, he doesn't just analyze those assets. He will go and do a huge amount of research outside of those assets to understand what is driving the mood or the sentiment of the market. What is driving people's behavior? Why are people selling so early in the morning in huge numbers? Why are people buying all of a sudden in huge numbers? So not only is he analyzing the trend that's happening on the chart, looking at price action, he focuses on what causes it, okay, via research, by doing research. So by trying to understand why these movements or these patterns and price action are seen on the platform, he believes he is able to make better decisions about trade entry and trade exits. Okay, so do a lot of research beyond those assets that he's focused on. And by doing this, he is able to fully understand economic and fundamental factors before putting real money on any trade. So he loves to be grounded in facts, knowing what's exactly going on. If Euro USD is going up, is it because of the US economy getting weaker, or is it because the Euro economy is getting stronger? Is that even possible? And are both of those things happening at the same time? So he does a lot of research to really understand the why we are seeing movements on the price action, on the candlestick charts, or on the line charts. Okay, so that's it. Seykota, he follows the trend, but takes a very deep view of underlying forces, trying to get to the why of price movements. Okay, so finally, the fifth trader I have for you guys today, and the habit that makes him successful, is George Soros. Okay, you have heard of him. He's quite famous, George Soros. I don't particularly like him, but I follow the other traders. But George Soros is somebody that as many times as I read about him, uh, I really don't, I cannot connect with whatever he's doing or how he's arriving at certain decisions. So he's just a trader that has huge success in trading, and he has a special habit. He's very similar to Ed Sakota, believe it or not, in grounded in research. So George Soros is also known as the man who broke the Bank of England, because one time he was able to make a winning bet on, was it in 1992, he made a winning trade, a huge short against the British pound, and it was a big victory for him. So he got the nickname the man who broke the Bank of England. Now, the thing about Soros is he's not just a technical trader, okay? He understands how emotions and news, he treats news as a piece of emotion, or an emotion signal, okay? So he doesn't really take news as facts. So he saw that emotions and news could create expectations, and some of these expectations are false expectations, okay, or self-fulfilling prophecies, okay. So by understanding that news is actually part of the thing that creates emotion, and he himself is a student, or somebody who reads market psychology and pays attention to it, so he often would put emotion and psychology and news together, and then he will try to take the position against all those emotions. Okay? So he positions himself before the market changes to correct the situation. Okay, so this is the thing that I don't particularly like to connect, because it's like many steps, and for me I like to keep my trading simple, but it works really really well for him. He's one of the most successful traders of all time. George Soros, if you read his books that are written about him, plenty. So he takes psychology, he takes um, uh, emotion, reading the situation, and then he reads and analyzes news to consider it as part of the thing that drives emotion in the market. And then if he believes this emotion that's driving the market is false, is built on false expectations or self-fulfilling prophecies, things that are not going to be true in the long term, he will take the trade against that position. Because one, if it's a self-fulfilling prophecy, and if there is false expectation that is driving the market, there will come a time the market needs to correct and comes back to reality. When that happens, he will make huge profits, because he takes the opposite position against all of those emotional or psychology in the market. Okay, so it works for him. You may want to try this out. You may enjoy doing fundamental analysis and studying emotion and connecting news, emotion, and psychology together before even deciding on what to do. Then you can follow George Soros, and that works wonders for him. I haven't had success with that, but you and I may be totally different in terms of how we look at things. Okay, so there you go. 5 habits coming from really successful traders. We got Stanley Druckenmiller, somebody who worked closely with Soros in his earlier years, I think. Yep. Okay, so Stanley Druckenmiller made an annual return of 30% for over 30 years. So that's a huge, huge track record. And then the second was Bill Lipschutz. He was a day trader and short-term high volume trades with incredible returns. Okay, quick wins. Bill would go for quick wins. Okay, and as we mentioned, the way he does that is by setting, setting the entry point and exit point, and never change his mind after that, no matter what happens. So he goes for quick wins, and he's very happy doing that, very successful doing that. Then we looked at Richard Dennis. Richard Dennis is a man who follows process. He's a process guy, and whatever you do, it needs to be defined in the process, and you need to follow it from A to Z. Don't ignore the process. Okay, don't skip the process. You cannot overcome the process, even if you think the process is suddenly wrong. So he's a very big systems guy. He was the guy who created the turtle trading experiment and produced a number of successful traders from that experiment. He believes traders can be trained, and they are not necessarily born with it. Okay, so you and I can train to become better traders. And then we looked at Ed Seykota. Ed Seykota is somebody who loves to understand underlying forces behind market movements, and he likes to understand why things are moving this way or that way, up or down or sideways. He loves to understand why before he makes his trading decisions. And then finally, George Soros is somebody who looks at emotion, market psychology, and news, treating news as part of emotion when that situation looks like that. And then if he is able to see that there is false expectation moving the market, he will take the trade against that false expectation. So when the market corrects itself, he makes a huge profit out of it. All 5 of these guys are super successful traders. So let me know what you think. If you've got other traders or successful traders with their habits that you want to share with us, share in the chat, in the comment section. Do not miss the chance. There is a promo code in the description section below. Use the promo code to double your deposit and take that opportunity to have more funds to trade in your trading account. Okay, so that's what I have for you today. If you've enjoyed it, give us a thumbs up, give us a like, share this video, and link to your friends and connections who also enjoy trading. So until next time, I will see you in the next live stream. Take care. Enjoy your trading. Bye.